Top three things in my notebook this morning. Number one, oil. Number two, Russia. And number three, all of Europe. When you look at what's been going on in oil, and what happened in oil yesterday wasn't obviously because of Canada, it's because oil is bearish. So again, oil is bearish, and in the fourth quadrant in our model, that predicts deflation. If you look at the oil intermediate term risk range that we're looking at now, we're looking at a price of 65, or call it 66-ish to 86-ish. And again, that's a real big problem for companies like MLPs that are dependent on these so-called distributable cash flows that Kevin Kaiser walked through on a very good conference call, which was bearish indeed, as Darius would say, yesterday. So if you want the replay on that, ping us. Oil relates to Russia. Now, Russia, the second point is that Russia continues to crash. Now, what happens if Russia is already collapsing? This is a major economy in the world. There's major demand components associated with Russia. And no, the Russians don't get paid, and Putin doesn't get increasing power if the price of petrodollars go down. Now, this Russian stock market down 26% for the year to date would agree with that. And if you can find me a reason why we could be wrong on considering that risk, again, risk management is all in the consideration of rising probabilities, please email me. The final point is Europe. Indeed, Europe looks like hell. Now, if you find one data point that pops within a sea of data points that are slowing, that's not a bull case. That's called a head fake. So again, if you look at this morning's economic data out of Europe across the board, like French PMI, 47.3, terrible number. German services PMI slows again. But if you pick the one thing that looked a little bit better, in other words, that didn't look like hell, German manufacturing PMI was 51.8. Now, it used to be in the high 50s. So again, this is not the savior of Europe. Neither is Draghi. And on the bounces, you shall sell Europe. You shall sell Europe in Europe terms, and then again, in European equity terms. And those are your top three things.